Hey everybody, this is Coach D here with TackleTrading.com, doing my best impersonation of Mark Justice with the beanie and the sweatshirt. You really should market this and create your own clothing line, Mark. And I'm here. I've got a really fun technical setup that I'm seeing form right now on the S&P index, on the futures, specifically on the E-mini S&P futures. And it's a real simple trade concept. It can go either way. It can go bullish or bearish and set us up for what we call a K trade, which is where you can buy on a breakout or you can short sell on the breakdown. And it's just a simple trade setup that I think you all will really like. It's just an inside consolidation. So let me back you out to the daily time frame and just talk about what we're looking at here. We had this big run up, in the market last week, and then we saw the market shoot up big on the vaccine news and then give up those gains by the close yesterday, and now we're just seeing an inside candle. Now, if we break this down into an intraday time frame, I'm looking at a 30-minute chart. And on the 30-minute chart, you see the price, it's been dropping, it's been slowing it down, it's been putting in what looks like a double bottom. And if you put that in the right context, it's got this rising 200-period moving average, and it's got an old support resistance zone in there. But that's not exactly what I'm excited about. I mean, I love the idea of the support bounce, but what I do like is that it's just consolidating and pinching to the inside. And anytime you get a consolidation pinch down, there's a really high probability that you're going to break out one to the one side or the other, and you can have a real simple, quick and easy day trade where you can take the money and run. And one of the other things that I look for is here you got to, between that the 200 period moving average and the 50 period moving average, and prices are pinching down and it's forming a little bit of what you might consider a triangle type pattern where it's just squeezing in and pinching. And one of the classic things I look for, and let me get to my chart where I have that, is I've got a chart here with a set of Bollinger bands on a 1 hour time frame and Keltner channels. And these are both envelope trading indicators or envelope, indicators that basically, give you kind of standard deviations in price. And one of the classic setups that I look for is on a 1 hour chart, maybe a 30-minute chart, but I like it on the 1 hour chart myself, where the Bollinger bands pinch inside of the Keltner channels. So whenever I see Bollinger bands pinch inside the Keltner channel, specifically on 1 hour chart, which you can actually see back here, where the Bollinger bands, the purple lines, pinched inside the Keltner channels, which are these gray and blue lines. And it's got that little inside consolidation setup. Again, it's going to look for it to break out or break down. Now, I don't know which way it's going to break, but it's real simple to go in and set up like a buy stop if it starts to break out this way and catch it for a ride, or to set up a sell stop and catch it that way. Now, because we're in a pre-existing upward trend, I'm favoring the bullish side on this. And there's no guarantee that that's what happens. But the idea is you can catch the breakout here and then trail a stop behind it and then maybe shoot for a quick target. Maybe you shoot for just 3580 or 3600, somewhere out there. And you try to take the quick money and run. But it's a really cool trade setup. Anytime you see that inside consolidation, you can throw some Bollinger bands on your chart with just the standard deviations of 2, the normal setting. You can throw your Keltner channels on the chart, and you watch for that Bollinger band to pinch inside. And I can probably find you a couple of examples back here if we just go look at it. Here's the example where it pinched inside back here. Let's see if I can find another one. They kind of pinched in a little bit right here as it consolidated down. So you can see back in here you had the bottom form it pinch in, and they pinched inside right there. And that's basically what we're looking for. And that's the same type of setup, that consolidation pattern where we're looking for that inside pinch. Bollinger bands and Keltner channels, watch for the breakout and trade accordingly with good position sizes and stop loss. And you might want to take that down to the new micro mini /MES if you're a smaller trader, rather than trade the full size contract. This is Coach D with TackleTrading.com. Hoping you're having a great day. It's Coach D again here. I almost forgot. You got to click the like and the subscribe button. Go ahead and smash that like and subscribe button. If you're new to tackle trading, come check us out. We got a 15-day free trial always where you can get to know us, follow the channel, come hang out with us every day on the Halftime Report. We'd love to see you there.